Hello guys, welcome to the Solid as a Stock session, and let me just make sure I've got my chat boxes up so I can see what you guys ask as you ask, if you ask, as we go through the session. Now hopefully it's obvious what we're covering. It's a stock session, so we're going to be looking at some stock trades, looking at trades we put on before, looking at some new trades as well that we can put on. Now I just need to make sure we cover the disclaimers, so there they are, top left hand corner. Please read them, not just for legal purposes but also to understand what you can expect from these kind of videos. Now my name is Becky, for those that might not have joined before. My name is Becky, my email address is down here. It is becky@traddictiv.com. There you go. And you've got support@traddictiv.com as well, so you've got email addresses you can go to help you, and in a minute I'll show you another place you can go to ask questions where you might actually find answers to your questions there as well. Now let's just make sure we know what the agenda is. So we will go through the current market environment, closed trades, any open positions and what we might be doing with them from previous sessions, and also some trade execution as well, looking for some new opportunities. Now we are streaming in multiple places. Let me just double check we are, but yes, it looks like we are. We are streaming in multiple places, which means we have some free channels like Facebook, YouTube, Twitch, things like that, LinkedIn, that are watching for free. But we also have a closed coaching environment where people are paying a small monthly fee to have access to that environment, and they are also in this room watching this video. Now, what that means is about halfway through the session, and it's normally after we find at least one trade example, we cut off the stream to the free mediums, free platforms, and we continue within the closed coaching community. So the closed coaching community have access to more of our time in that closed environment. So hopefully that makes sense as to what's happening and why it's happening. For those that are watching on the free platforms, don't worry, you'll at least get an example of one trade to understand the methodology and also see it in action and do with that what you will. Okay, so let me just take you to a quick link here, which is tradewithufos.com/Becky. That link will bring you to this page. From here, you can get the apps for different platforms, depending on which ones that you use. You can book one-on-one coaching with me if you'd like to do that. And you can also scroll down and ask a question in this area. Once you've logged in, you can ask a question in this area, which is great because it means we can answer questions in that area. We all learn from the same place. We all learn from the questions and answers that other people give. Now, these answers are down here for previous questions, so you can look at that. Perhaps the answer to your question is already there, or perhaps you'll do somebody else the favour by asking that question and getting the answer in this public domain. Hopefully that makes sense. Okay, let's get cracking. Let's have a look at a couple of things first. So what we're going to do first is look at our closed trades, or look at trades that we put on last time and in sessions previously, and see where they're at, what's going on with them, things like that. So just bringing up my list here to see what we've got. Okay, so this one was PEB, Pebblebrook Hotel Trust. Now in this situation we placed this on the 15th of October in the closed coaching session, and just to expand here and show you what happened. So it triggered here on the 15th of October, so by the end of the day, and then on the Monday morning still would have been a valid trade based on our rules. It would have then come up, hit our safety target, which is here, and then of course it came against us and it stopped us out a couple of days later. So overall this was a break-even trade. We made half of the trade and then we lost the other half. That's what this safety target is for. It went a little bit in our favour, but not really as far as we thought. We have that safety target in place so that if that happens, we don't make money, we don't lose money. It's a break-even trade. So PEB there was a break-even trade. Okay, then we had MWA. So let's take that. Muller Water Products. Just looking at chat boxes there. If you see me looking to the side, I'm looking for chat boxes and seeing if you guys have any active questions, which by the way, I should have said, by all means, please do. If you're watching live and you have questions, ask them, because you're probably not the only one that has them. So MWA. MWA, unfortunately, this was placed on the 15th of October, so round about here, after price had gapped up, and then we placed it around about this time. And of course it came down close to our entry, but didn't quite come in, and it's moved off since there. Now I would still leave this as a pending trade, and the reason for that is because it may be, depending on how price falls, it may be that if it falls, the EMA falls with it and it aligns in here somewhere to still have a trade. I doubt it, and as price moves towards it, if it does, we need to keep an eye on that and see. But I wouldn't cancel it right now. I would just wait and see what happens with whether price continues to shoot off, in which case we missed it, we cancel it, or whether or not price starts to fall. And the reason I say that is because it's just hit a big stack of sell orders here. Whether price starts to fall towards us and end up lining up with us. So we'll check on that, keep an eye on it, I'd say every few days, and see what happens there. So MWA still open, still pending. We had a Disney short, which was sad for me, because I'm a Disney fan, so I don't want to short it. This was unfortunate. We had a Disney short that stopped us out by a matter of cents. Stopped us out by, I think, 19 cents is what it stopped us out by. And as you can see, it would have, if it hadn't have gone all that way far, and it was a big wick there as well, so a bit of erratic movement there on Disney. It came in. If it hadn't quite hit the stop, of course, we would have already been in profit, hit our safety target, and be well on our way to our final target. However, we got stopped out by a few cents. So unfortunately, Disney here was a loss. It's one of those situations I would rather be very wrong and price just moves against me and go, okay, well, I tried, you know, rather than see victory, but not have been a part of it for the sake of a few cents. But it happens. That's how this works sometimes. Rather have that and have a stop in place to make sure that we're safe just in case we were very wrong, than it would be to sort of open it up and open our risk up there. So overall loss there on Disney. Then we had, so it was JNPR, that's the Juniper Networks, there we go. So this one was very nearly a break-even trade, but ended up being an out-and-out loss. So we had price, we placed it on the 15th. Price came in, hit us here on the 18th. Still a valid trade, still would have lined up with the EMA and with our climate. It moved away, didn't quite, if I move this out of the way, didn't quite hit our safety target again. Few cents away, unfortunately, and then came back against us. So it would have been a stop out there. Again, a couple of unlucky situations that we've had there, but that just happens. Just inched out of UFO. Yeah, exactly. It's yeah, happens. MNR. So this was Monmouth, I believe. There you go. MNR. So we're still in this trade. So I wouldn't, to be fair, based on what I'm seeing right now, I wouldn't be surprised if this becomes a loss. But for the time being, it's still lining up, so we would still be in this, unless that's the high of that. Oh, brilliant. Okay, well, I was going to say this might be a loss, but actually it might be a break even. So the worst that happens with this trade is a break even. So let me just explain that. We placed this on the 15th of October, around about here. Price obviously came in and hit us at this point, which was the 18th of October. Things still lining up. EMA still within there. Auto climate still good. For those, by the way, that don't know what I mean when I say that, we'll get there. For those that do know what I mean, what I say, then you know what I mean. So we hit our entry there on the 18th. It then moved away, and this is lucky in the good side, I guess, is that the high of this candle was 19.30. which was our safety target. So assuming that we were filled, which should have been, it's tight, but we should have been filled, then we've taken half of our trade already. It's now moving against us back within our zone. And if it were to fall all the way down, then we'd get stopped out on the other half. So profit on one half, stop out on the other half, overall break-even trade. If it were to move up and continue on, then we might stay in this trade. For the time being, the worst that happens now is that it's break even, which is a good place to be in. And then there was X-ray, which was from the time before the last time. I think it's X-ray. Is it X-ray? Yeah. So X-ray was a trade. So just for those that joined a couple of sessions ago, X-ray was a trade that we placed on the 24th of September. We would have been triggered on the 27th of September. Hit our safety target now a long time ago, and it's of course moved quite well in our favour. New UFOs have been forming. Climate is still down. it looks like we're on track to hit our final target. Hopefully we do. If we don't, then we will likely, let's say price from here, let's say it goes up from here, and we saw this move go in our favor, but it actually starts to move against us. Well, we have a few ways that we can manage this. We can move our stop here to just behind this UFO, and then we take that amount of profit. We could change or get out manually of the trade as soon as we no longer have the climate in our favor, which is around, should be around about the 59 mark, 60 mark. So again, we're likely, however we get out of this trade, if it was to move against us, we're likely to get out around about here, take a little bit of profit out of it. I know that's a shame when we can see that that's all available to us, but we have our target here for a reason, and hopefully it looks like it's on a trajectory to keep going down there. So we'll keep an eye on that, and we'll come back to that next time. So I think that's all of our open trades, all of our trades from the last few sessions. So what we'll do now is look for new trades. If there are specific markets you want me to look at, or specific ETFs or whatever, let me know in the chat boxes and I will go and look at them. Let's first start though, just to be aware of our economic calendar, what news reports are scheduled to come out that might impact our trades, and therefore to just be aware of, depending on how you manage your risk. So Monday morning, by the way, I've filtered here by US markets because we're going to look at US stocks. Of course, if you're trading in different markets, then you would change that. I've also filtered by high impact news. So what we can see is that on Monday, we've got some news coming out 10 o'clock that could affect us. On Wednesday, we've got sort of morning, early afternoon, full of different announcements that could affect the markets. And on Friday, we have non-farm payrolls. Non-farm payrolls often move the markets, not always, but often. So be aware of these things. They might create a bit of volatility in the markets. Now that might mean that you do a few things. It might mean that you decrease your risk percentage that you're using on these trades. It might mean that you just place less trades. Rather than place 10, you place 5, or rather than place 2, you place 1. Or it might be that you just give yourself a little bit more wiggle room. Or perhaps just before the news comes out, you get out of that trade, you wait for the news to happen, see what the effect will be, and then you can place it again, get back into it. Different ways to deal with it, but just be aware of it and then be consistent on the way you act on that information. Alrighty, so let's go to Top, which is our platform, so that we can find some trades. Now, Top and TradeStation, it's using the same data. So if you have a TradeStation account, then you should see these UFOs in the same places, same data. What we'll do is we'll use Top to find the opportunities. We'll get the numbers from Top, and then we'll take it back to TradingView to then place these trades and draw on the charts and things like that. So we're using two different platforms depending on what you guys use. So it makes a bit more sense if you're using one over the other, if that makes sense. Okay, so first things first, let's have a look at the ES, which is the futures contract that represents the top 500 US stocks. Now we do that just to see what's going on in the broader market. In the general market, we want to know what's going on. Now, why do we care if we're going to be trading individual stocks? Because there's a correlation between the two. If the whole market is going up and we're also trading a stock that's inside that market, if that's also going up, then they're lining up together. That's not to say, by the way, if we look at an individual stock that has its individual probabilities to the downside, that wins over the correlation. We'd still take a short, but I'd rather first look for opportunities that line up with what the stock market as a whole is doing, which in this case, on a weekly chart, and we'll start with weekly charts, we can go to lower charts if you'd like. We'll start with weekly charts for our AutoClimate, slightly bigger, longer term swing trading. We have a thick blue dot on our AutoClimate. AutoClimate is a free app on most platforms you can get it on. And what AutoClimate does is show us where we have probabilities. So we've got a thick blue dot there telling us probability is upwards, which means I would rather scan for stocks that also have probability upwards to add that correlation in right from the off. So what we'll do here is we'll go to our matrix. I've got a couple there, so let's close that and bring another one. Go to our matrix, and what we're going to do here, we can come down to all stock symbols. So we're scanning all stocks. We are choosing US stocks and ETFs. We've got minimum price of $15. That could be 10, it could be 12, it could be, you know, something around there. Ideally, basically, what we don't want to do is trade penny stocks or be trading very, very cheap stocks. The reason for that is just because the cheaper they are, probably the less institutional interest they have, which means the less likely statistics are to work as well, because they're more easily moved by the retail public that obviously aren't as professional as institutional interest. I'll put a max price in. In fact, actually, I won't. For most people, of course, if a stock is worth $3,000 a share, you're only really going to get involved in it if you've got a lot of capital to mean that you can tie that up, and the few cents that it moves or the few dollars that it moves is worth it for you, sort of, if you've got many shares and therefore the capital to buy many shares. Some of you will have smaller accounts. I guess by putting a cap on it, I might be excluding those that might have the higher capital, so I'll leave that blank. Now what I'm going to do is come to the additional filters, and first things first, I want to make sure that I'm going to exclude stocks that have earnings within the next, I'm going to say 5 days. Reason for that is because our position trading, sort of swing position trading, we want to maybe be in these trades for a good few days at least, and so by excluding stocks that have earnings coming out within the next 5 days, you know, earnings can impact these markets, so we want to sort of keep safer, I guess, to start with. Then all I'm going to do, I'm going to come to the Auto Climate tab, and I'm going to search for weekly trades, or I'm going to search for stocks that have weekly Auto Climate confirmed up. We're going to untick that for now. We'll go hopeful, because we'll still have a look at those. And we're going to click near the 9 EMA. So essentially what we're saying is we want to look at good trade setups that fit our methodology, that we have probability to the upside close to an ideal trading price. That's what that means. So if we click scan, we should have a nice list. And that's a decent list. That's what, 10, 12? So that should keep us busy for a little while. And literally all I'm going to do, I'm going to filter by the symbol. So I'm going to go top to bottom alphabetically, clicking on them, seeing what we have. If we don't have anything, then we'll broaden our horizons a little bit there. If we do have something, then we'll place that trade. If you guys have any particular stocks you want to look at as well, let me know, or perhaps different time frames, also happy to do that. So starting with BOX, B-O-X is the symbol. Now that's clearly loading. I was going to say that's a very good, for those that know, that's a very good number to have 100% probability on the UFO, but it's obviously just loading here. Okay, so very quickly, just to tell you on this one, we don't have any probabilities, or we don't have a setup, I should say. The climate tells us we have probability upwards. If we have probability upwards, we want to look to buy. We want to buy at these places where we have these green UFOs, because that shows us where we have buyers. And we want to make sure that those green UFOs on the right hand side coincide with the EMA price on the left hand side, because there would be buyers at the EMA as well. So what we do is we add buyers and buyers around about the same price to add probabilities. If we don't have those two things line up, it's probably not worth doing. And at this point, the EMA 25.41. EMA is way too far away from the UFO, so nothing on that one. Okay, let's click on the next one, and again we'll just go through one by one, see what we've got. Wait for it to load, of course, each time. That's a very strange looking situation right there. That's very interesting. I've very rarely seen that pattern. So for weeks it's just stayed within some range. I'm assuming that's because something's going on with it. In fact, I would move away from that. I think it looks too weird. It probably means there's something interesting going on there. I'd rather not go in blind, so we'll click on the next one. Columbia Property Trust. Similar situation there as well. I'm not sure if you can see that. I'm not sure if this is a top thing. Let's have a look at the next one and just see if that was a coincidence. Yeah, okay, it must have been those individual stocks. Okay, brilliant. So let's look at this one, see what we've got going on. 23 point, what was it? 23.52. This one might actually work out. So we've got our EMA at around about 23.52, which is about here. Now, as price moves down, so too is our EMA likely to move down and therefore likely to coincide with this UFO. So that's a situation we might actually want to look into. Now what I'm going to do, I'm going to put a pin in that one because it's not exactly lining up and we're kind of using, not guesswork, but we're using anticipation on our side to sort of say, okay, well, if that moves, then that's likely to move. It may not line up. It's likely to, but it may not. So I'll use it as a backup to come back to if we don't find anything that's like more clearly lining up. We'll keep it in our back pocket. So that was home B, if we want to remember the symbol. Okay, so no trade here because the EMA again is not lining up with any UFOs. No problem. PBA. Pembina pipeline. What have we got there? 32.63. No, again, unfortunately, the UFO is too far away from the EMA for it to line up. Let's come back here. PMT. Don't make me laugh. That's my immaturity. So 19.95. Nope, nothing lining up there. No UFOs around about where the EMA is. So nothing there. PNM. Let's wait for this to load, but I don't think it will based on what we see. Perhaps, but unlikely. So 49.52, that's where we have the EMA. So just waiting for the data to populate on the right hand side. Yeah, if we look at this, we've got UFOs quite far away, all the way down here, whereas the EMA is here. So yeah, very, very much not lining up. So it might be that we come back to home B as our example there, which is very likely to line up. So we're seeing this interesting pattern in a lot of our stocks. This sort of almost like a flag, isn't it? It's almost like a pole to the upside and a flag coming out to the right as a candlestick pattern. Now for me, like I said, the fact that it's very, very tight compared to what's come before it, yeah, it just concerns me a little bit. It's not normal. So let's see, has this loaded? Looks like it has. Wow, no UFOs it would appear. So I'm squishing this just to see if we have UFOs really high. Oh wow, look. So this is what I mean, this strange situation that we've seen here in a couple of stocks now, where we have price not really going anywhere for weeks and weeks and weeks, and price is up here and the EMA is very, very close. The closest stack of buyers that we can find is all the way down here. Good, what, $8, which is like what, 20% maybe, 25% of the value of the stock. Huge jump down. So we don't want to be buying anywhere around there now. So that's the one we just looked at. So let's come back. So it looks like we've got two more to look at before we go back to our backup, which was home B. Vonage, I think that's what it's called. So 15.65. Yeah, it doesn't look like we have any UFOs here, and the data loading won't create anything different there. So nothing on that one. And let's look at our last one, Washington rate, R-E-I-T. And nothing on there either. Nothing on there because the EMA is 25.3, which is here. And we've got no UFOs around there. So we'll come back to home B and we'll look at this in more depth. And I'll expand a little bit what I was saying and what I meant. Oh, I've got a suggestion there from Steve as well. So in fact, what I'll do, Steve, if we do your suggestions, have a look at that. DLR. It might have earnings, I guess, in the next 5 days, which is why it didn't show up on the scan. But yeah, looking good, brilliant. So thank you, Steve. We'll place this one on TradingView. Be aware that obviously it wasn't on the scan, and that may be because it's got earnings coming out within the next 5 days. Now, it might be that earnings are coming out in 4 days or in 3 days, but be aware when you're placing trades on stocks, be aware when earnings are coming out, because they do tend to create a little bit of movement in these markets. So what you can then do is if you've got earnings coming out, let's say, I'm making up the day, let's say earnings are coming out on Wednesday, then check in on that stock on Wednesday. If you're in that trade already, maybe get out of that trade ready to get back into it after the announcement of the earnings have come out and after price has reacted. Equally, you might, if you're not already in the trade and price is close to it, you might again want to cancel it and see what happens. You might want to just leave it and just reduce your risk, like reduce your risk percentage, because you know that there might be some volatility coming up. But just have a look, whatever you're looking at. Earnings were out on the 26th. Interesting. Okay, thank you, Steve, for looking into that. I just wondered why it didn't come up on the matrix there. Maybe it was something to do with it not being near the 9 EMA, technically, I guess. So cool. All right, let's have a look at this one and let's just place the numbers. So what we're going to do, I'm just going to make a note for myself so I can keep the numbers so I don't have to keep coming back and forth. So it's going to be a long position. Our entry and stop we're going to get from these numbers. So our entry is this first number here, which is 153.94. Our stop is 152.33. Our safety target we'll figure out in a minute. Our final target is going to be based off of the bigger time frame. It looks like we don't have anything to base off on the bigger time frame. What I was looking for is a red UFO. Would look something like that, I guess. There you go. Would look something like that. I was looking for a red UFO on the left hand side, which would show me where price might fall from because it's likely to hit a bunch of sell orders. Since we don't have those sell orders on that time frame, instead what we'll do is we will have a trailing stop there as our second target, if that makes sense. So what we're going to do, we're going to go to TradingView and we are going to have a look. DLR. Okay, right, so just one thing to, it is Digital Realty Trust, right? Just checking that it's the same company. Cool. On TradingView, you might see different data. It's coming from a different place. It's coming from a different exchange. We're going to essentially ignore, and I will take the UFOs off actually. Essentially ignore what we see here because we are using the data from top, which is the same data as from TradeStation. So kind of ignore what you might see on TradingView. I'm just going to draw randomly some lines so that I can double click on them and type in the numbers. So the entry was 153.94. The stop was 152.33. Now, just to come back very quickly, it says there 152.33. That's the stop reference. We're going to take off 10 cents as well, give it a little bit of room. So it's actually 152.23. It's going to be the stop. So let's do that again. 152.23. There we go. Now we know that our second target is trailing. So now we need to figure out our final, our first target, our safety target. So we're going to use the tools on TradingView to do this. This is one of the reasons that I prefer to use TradingView actually when it comes to placing the trade. It's because it's very, very user friendly, very great for placing trades, I think for doing a lot of maths for you. Now I'm just going to do this and then explain it. So we have our entry price that we've put in here. We've just clicked buy limit, which means we'll buy when it gets there or if it gets there. So we've got our entry price in there. Our stop loss is down here. And then by putting those two numbers in, it's told us how many ticks, which in this case is actually how many cents, 171 cents between top and bottom, between entry and stop, which then tells us if we were to be risking or trading one share, that's obviously $1.71 worth of risk. Well, I always make sure, especially on these examples, that my risk is a nice round number so that I can easily half it. So I'm assuming that the total risk is $150 on one, $50 on the other, because we're going to place two separate trades here, or two separate targets here. So the first one, $50 of risk, it then works out for me how many shares that needs to be. I don't need to do any maths on it. And then my safety target is always 1 to 1 away. So if it's $1.71 between risk and stop, and between entry and stop, then it's $1.71 between entry and target as well. So we'll place that. I'll then put a little little green line on there, so we know that that's our target. So it's 155.65. And then our second target, like we said, was a trailing stop. So what we'll do, 153.94, same entry, same stop loss, same risk. We just won't put a profit target on. That way, as price moves up, let's say price comes in, starts to move up from there, we can then move our stop behind what we see, so that we're locking in profit. So I'm just going to put here, so placed on the 29th. Oh yeah, it's a Halloween weekend, isn't it? So placed 29th of October. This was in a live session, and target 2 is trailing. Brilliant. Okay. Do you know what I'll do quickly before I cut the stream? Just because we were looking at this one as a potential backup and kind of got a sidetrack into that one, which was a good setup. Thank you there, Steve. We'll just finish this one. So you guys have now got two examples on the free sessions. Then we'll cut the stream and go on to some other opportunities that we might be able to see. So this is home B. This is home bank. That's what it says there. We have a thick blue dot, probability upwards. We have a UFO that's nearby. The EMA, which it's hard to see the number, but it's 23.52, which is literally just here. As price moves down, so too will the EMA. It's only got to move down 3 cents in order to coincide with this, and price would have to fall by 20 cents ish. So likely that this is going to line up. So let's place this one as well. We'll do it very quick and then we will carry on in the closed coaching. Okay, so home B, this is a long. It would be 23.49 to 23.23. So again, we're giving it 10 cents extra. A little bit of wiggle room there. Our safety target we'll figure out. Our final target doesn't look like we have any sell orders on there. So same situation. It's going to be a trailing stop. Okay, so now I've got the numbers. We'll come back to TradingView and we'll put them in here. Okay, so let's just go around. So the entry was 23.49 to 23.23. So it's a very tight little range there, but that should be fine. For those of you that follow candlestick patterns, so you've got this little sort of mini pivot there. You might want to include that in your stop. I won't. It's just a suggestion there if you do follow that way of thinking. So 23.49 to 23.23, $50 of risk. If it's 26 cents between entry and stop, then it's 26 cents for me between my entry and safety target, which makes the safety target 23.75, and we'll buy that. We know our safety target, our final target is a trailing stop. So same situation, same entry, same stop. We just won't click take profit and we'll trail our stop alongside if we are right. So placed 29th of October in the live session, like free session, and T2 is trading. Okay, cool. So what we'll do now is we will cut the stream to the free sessions. We'll carry on in the closed coaching. So just to summarize very quickly for those watching on the free session, we've just placed a trade on home bank shares because it's likely to be that our EMA will line up with our UFO as price comes down. If price comes that far down, I wouldn't be surprised if it did. We also had DLR, which was a suggestion that we took from the chat box. This was a trade where price is a little bit further away. I think that might have been why it didn't show up on the scan. It might have been sort of technically, numerically speaking, too far away from what the EMA price is. But with this trade, if price were to fall, depending on how it falls, then the EMA is likely to still be inside it, and then we can place that trade, or then we can get into that trade. If by the time price gets down here, the EMA no longer lines up, we cancel the trade. If it continues from here and doesn't ever come back, then we cancel the trade. So we need to keep an eye on these things. These aren't put them in and forget them forever. You can do a sort of set and forget, but just check in on them every, if you've got a weekly chart on the left, I'd say check in on them every couple of days and just see what the situation is. Cancel it if it doesn't line up anymore. Keep it on if it does still line up, and just manage them and monitor them as you go. Okay, so for those watching on the free sessions, we're going to cut the stream now. Just to remind you to go to tradewithufos.com/Becky. If you have any questions, you can do things like book one-on-one coaching and ask questions here, which is great for everybody to learn from. You can also get apps here as well for different platforms that you use. If you want to email me, you can. That's becky@traddictiv.com. And I'll be back on Monday morning. So for those of you watching on the free sessions, have a great Halloween. Trick or treat. I hope you get a lot of candy, but obviously in a safe way as well. Have fun, and I will see you next week. And hopefully this was helpful. Let me know if you have any questions. For those in a closed coaching, give me a sec. As always, just got to turn the destinations off or turn the platforms off. So take care, guys. See you soon.